for those of you who have some questions to our panelists, we're going to spend 20 minutes of this session to just have the audience just ask questions. So just rack up those questions, and this is going to be an informal session. So Gary talked about loans and working capital, and our next presenter, Ms. Claudine Emmett, comes from Kiva, and it's a crowdfunding platform that addresses some of the limitations of loans, right? And I'll let Claudine elaborate further on that. You can actually present over there if that's what you want.
Oh, okay. Hi, can you hear me? Thanks for having me. And thank you for your presentation on SME finance, something that we're grappling with at Kiva as well. So it's great to hear Oiko is trying to tackle it. Like Oiko Credit, Kiva lends money to MFIs, but unlike Oiko, Kiva collects that money from the crowd, from individual lenders like myself and anyone in this audience who can lend at $25 at a time. So we've been around for almost 10 years. Our birthday's coming up in October. We started with an exclusive focus on microfinance, and for the first 5 years, we worked to develop our microfinance portfolio. And we're really looking to prove the concept that we could leverage the crowd around the world to give credit lines to MFIs that would then on-lend to borrowers. To date, we're currently working through our field partners in 86 countries. We have 296 field partners, which are the MFIs and social enterprises around the world that are actually working with borrowers on the ground. They're the ones who are sourcing borrowers for our website, underwriting the loans, collecting repayments, and doing all of the actual loan management work that we can't do from our headquarters in San Francisco. To date, we have lent over $715 million in loans. Again, that's almost all through individual lenders, through the crowd. Some of that loan fund has come from institutional partners and corporate partners who do manage lending with us, but the vast majority is through individual lenders. Our current repayment rate is 98.7%. It's never gone below 98%, so even though we don't get 100% repayment rates, it's still extremely high, which is typical of microfinance, and particularly with a large female client base. It's not unusual, but it's one thing that keeps our lenders coming back. They can put their money in, and then 98.7% of the time that money is returned to them and they can recycle it in the system. So I'm going to talk a little bit about our clean energy lending, which we've been doing for roughly 5 years or so. And as I said, Kiva started with a focus on microfinance, but over the last several years, we've realized that there's a lot more that we can and should be doing with our lenders' funds. Because our lenders' funds are uniquely structured, they're very risk tolerant. Our lenders are there not for a financial return. We lend at 0% interest to our finance partners, so our lenders are there looking for a social return, and thus they are generally fairly risk tolerant and very willing and in fact excited for us to push boundaries with what we're doing with our field partners and the end users on our site. We also have really flexible terms of their loans. We look to our field partners to structure the products as they see fit and let us know what makes sense for their markets and their consumers. So we have loans that are short term, anywhere from 4 to 6 months, all the way up to 11 years for higher education loans. And our loan sizes range from about $50 up to $50,000. So we are exploring SME lending, and we've done a lot of that actually in the clean energy sector. And again, using the risk tolerant and unique capital of our lenders, we decided that we should push boundaries beyond microfinance and see what we could do in other sectors that we think are important, including clean energy. And part of this came from an increasing need we were seeing from what we call non-microfinance institutions or non-MFIs that had a need for patient subsidized debt capital that they could on-lend to their clients and customers. So clean energy companies or NGOs that that saw a need for in-consumer credit, or maybe retailer credit or supplier credit, but they weren't able to access funds from commercial banks or MFIs to do that kind of lending. And so we started expanding beyond microfinance, first actually with our MFIs that wanted to pilot clean energy loans for their clients, both for end consumers to retrofit their houses or for small businesses. But aside from that, we also started partnering directly with non-microfinance institutions, social enterprises mainly, some of which are at this forum this week, that had a need for debt in their client base. And we've experimented with financing all along the value chain, from supplier loans at around $50,000 to in-consumer loans for small solar lanterns. We've also experimented with doing a few project finance loans for microgrids, namely to enable communities to purchase that initial connection fee, which is often a major hurdle. And we've been really excited about the uptake. The loans are typically really popular on our site. A $50,000 clean energy loan is usually funded within a matter of a day or 2 days on our site, so it's a popular product. To date, we've done almost $7 million in clean energy loans through about 33 field partners working in this sector. The vast majority of that loan volume is attributed to solar, with the smaller shares going to biodigesters and cook stoves, and then a few other renewable energy products. The average loan size in this sector is almost $1,600, which is much larger than our site-wide average loan size, which is about $400, and the average loan term is also a bit longer at 21 months. So we've been excited about the uptake we've seen, and look forward to experimenting more in the sector.
Sorry, Claudine, can you explain how, for example, if you're a clean energy company in the audience, number one, is this Asia Pacific wide?
Worldwide.
Worldwide, okay.
Yeah. The majority of our clean energy lending has been in the Asia Pacific, but we are working in 85 countries right now around the world.
Okay. And how does it work? Can you walk us through the application process and how the marketing happens when you're in a crowdfunding site?
Yeah, good question. So an interested field partner would apply to our site, and we conduct due diligence, and we tier our due diligence according to the scale and kind of state of the potential field partner. So for a smaller, younger organization, we might start them at a credit line at $50,000. And that credit line is not money that we just deposit in their bank account. That's actually money that they need to raise dollar for dollar on our site through loans. So we're not just giving them $50,000 or $1 million and say, here, go forth and lend. They actually have to source the borrowers, post them to our website, and that's how they raise the money that we offer them through credit lines. So we conduct due diligence on them, and as I said, kind of tier due diligence according to their credit needs. And then once we've approved them and have worked through the kinks to get them posting on the site, they post their loans, and we let the crowd respond. So we don't actively market loans on behalf of our field partners. We believe in an open marketplace, and to the extent that they want to market them, that's completely their prerogative. But as I said, in the clean energy sector, the loans typically are very popular. They usually fly off the site and don't have trouble funding.
All right. Just one more clarification. In terms of the profile page that the crowdfunding public sees, is there a video? What would you recommend for a clean energy company to have to enable them to sort of attract the interest that for the loan?
Yeah, we've had a lot of our partners experiment with videos. Those tend to be pretty time intensive, and we're not sure that they're really worth the investment on their part to produce them. So a good photo is worth 1,000 words. That's the main selling point on Kiva. An excellent photo and a concise but good story describing the borrower are the best places to start.
Okay, thank you.